Hope we're doing good. Hope we're doing great. And I believe we had a great day. Okay. Yeah, good morning, good morning, good morning. So today is going to be more about questions and answers. Right? It's going to be more about questions and answers. But before we open the floor for that, I'll just go through just a few things you need to know first as a beginner, right? Um, Number one, if you miss an entry, it's best to come back and check it again. I like using myself as an example, right? Um, if you miss an entry, or let's say a particular trading got the way you want it, it's always good to hang around to see if it's gonna do what you want, right? Um, I don't know if you remember when I talked about this my analysis on the New Zealand dollar against the US dollar, right? It made the first move the first day, right? I left it. It came back, took me out afterwards. But just that same day, just after taking me out, that was legit the lowest point the market got ever since. That was last week, last Thursday, actually. Exactly a week today, right? Exactly. Okay, I'm coming. Exactly a week today, right? From there. So one is if you miss an entry, always come back to check it. So now looking at this, let's say you are working with break and retest, right? The market broke the last reasonable high. One thing about whatever we show you or whatever we teach, regardless, is that it always happens on any time frame. This is the 1 hour time frame, right? This is the highest point the market was before hitting this lowest point on this hour chart, right? We came, broke it. This should be the Friday news, right? The NFP news was so bullish, right? It broke it. And one thing about any news is that if your analysis is right, thank you, Jose. Right. So if your analysis is right, the market always, regardless of the news or not, yeah, the market will always respect your analysis. Okay. Markets will always respect your analysis. So what happened there? After the NFP news, the market retraced a little bit. Boom, respected this zone. Then, of course, took off, right? And this was a target area I had when I was analyzing this particular trade. And you can see, market can beat that high and it's still going up, right? So this is it. In your analysis, in fact, when you start doing your personal analysis, some days the market will behave as though what you analyzed is not really worth it, or it's not what you think. You're gonna make a move like, you know what? I'm expecting so pair to buy or sell, and it doesn't make that move immediately. You can start second guessing yourself. I'm telling you what you will see over time when you start doing this analysis yourself, right? You start second guessing yourself, then start thinking, am I actually right? I think I should going for a sell instead of going for a buy. At that moment, the first thing you need to do is ask yourself a question. Did I second guess myself when I analyzed this trade? What was my state of mind when I did this analysis? Right? If you were at peace when you did the analysis, allow it to run, or go back again and stick to that particular idea you had. Because what is screaming, of course, when the market is not really going your way, or let's say when, regardless, today is basically about um, forex, right? So when the market is playing around your SL zone, or of course, you're just at break even or SL or a loss, the market is still playing around, it hasn't hit your SL yet. You start second guessing. That's just your emotion screaming, right? I don't want to be wrong. I shouldn't be wrong. In fact, I want to make money. So many your emotions are at play, all right? And you don't want to make a realization in that state, right? So you see this, boom, it disappeared. Then what happened? Another pullback, right? Another pullback. Of course, this one now didn't get to this high anyway. That's why I told you there is no perfect break and retest. Sometimes the market mustn't get to the former high before it will continue its journey. But in this case, you can see where it got. It got to this point, which is like, this is another block. And I don't know, I've not talked about other block, but I made mention of it yesterday, right? I said another block is the last negative or opposite candle that gave rise to a bullish or bearish momentum, right? If it's okay, in this case, this is another block, right? This is for beginners, so we shall understand this. It should help you regardless. This is another block. Let me mark it out so you see. Apart from fair value gaps, other blocks are other things you can look out for, right? This candle. This is a bullish order block. Why this? A okay, this is a perfect bearish order block. All right. Other blocks are always opposite of the candle, or they're always opposite of the move. Basically, if I'm to use this can be it as well. All right. Then, of course, the market came back, resetted the other block, continued selling. And what happened there? Same thing. Yeah. So this is just have this in mind as well. All right. So as this is the case, this is another one as well. This is another one as well. So I just wanted to show you this, right? We'll have another session where we'll not talk about psychology, how to behave in different market conditions, how to behave this time, not even how to take trades, how to behave in different market conditions, right? Then another thing you need to put into consideration is the time you take your trade, right? Brokers between these off trading hours, off official trading hours, there's always an increase in spread, right? So I'm going to use, let's say, if you check your 95 accounts, right, you're going to see this would have been best I shared, but however it is, you're going to see spread. Spread is like, uh, it's just a way of the broker making money anyway, right? That's why when choosing brokers, you don't choose ones that has crazy spread. Because if you think about it, let's say you have a broker that has 10 spread, for instance, on a particular pair, right? Let me use, uh, look at NSD, for instance. You have 10 spreads. Your entry is at, let's say you're looking at entry at 0.58843, right? You're looking at 0.58843. So automatically, when the market gets to 0.58843, it should activate, right? It should activate. Now, a broker that has uh, a broker that has 10, right? 10 spread, like the spread is like for this particular pair, right? It's as much as 10. So instead of the market to activate at this price, yeah, it will activate at a lower price, right? So instead of 58836, it's going to activate as 58843. 76. Remember, you're looking for a buy, right? So the market activated here, but your order started way below here. So you automatically, wait, let me summarize what I'm saying. No, if you want to take a buy, yeah, it's to activate at a higher price, not low, right? So for you, the price is here. So the market has made this move. So the main thing is for you to even be in profit on your particular trade, the market needs to move 10 points, right? 10 points in your favor before you are even at break even. That's why anytime you place any trade, you don't see profit straight up, or you don't see 0.00 straight up. You see minus, right? And the trading time and times you take a trade matters, right? If you're taking trades off trading hours, observe, right? You're going to see much spread. You can see like 48, depending. It can be crazy sometimes, right? It can be really crazy sometimes. So you don't rob yourself. Now, let's talk about it like a finance guy or an economist, right? Let's say for every, okay, let's say you're using $1 per point to take your trade. So for every move you make on a particular trade, it is $1, right? Let's say you are risking 0.1 for your trade, and that's like $1 per trade. So if your market moves 100 pips, you're making $100. Think about this, right? You are trading with a broker, or you're trading at a time where the broker charges like 10. So for every dollar you're making, you're paying 10 cents, right? For every dollar you're making, you're paying 10 cents. You don't see it this way, but that's money being robbed off you, right? So for every $100 you're making, you're paying $10. Take this cumulatively. For every $1,000 you make, you're paying $100. For a wide trading, for not even you make, for every trade you take, basically, right? You're paying this money regardless, whether you win or lose, it's being paid, right? So imagine you're taking 1,000 trades. For 1,000 trades times 10, I don't know how to put it, for 1,000 pips, you already set aside 100 naira, $100 that you've paid, whether you like it or not. Sometimes we don't get to factor all of this, but this is money, right? This is money. Now imagine now you're trading with a higher um risk, let's say um $10 per pip, $200 per pip. Okay, not $100 per pip. That's like one lot size or 10 lot size, basically. So you can see, right? Um, so the essence is if you're trading off trading hours, just like this time by 6, some brokers, their spread are massive. In fact, it's even worse during 11, midnight, that area. Let's say 11, 12, 10, can be crazy that time. But everything stabilizes when the market officially opens, let's say from 8, 9, and all that. And there's also a crazy spread during news events because people are going to enter crazily, and of course, there'll be lots of things happening in the market. So just have that in mind, okay? And just observe it yourself. Just see it, okay? Sometimes you take a particular trade with 0.1, you're seeing minus um 0.1 something. There's some days you see minus 0.4. There's some days you see minus 0.8. There's some days you see minus 0.00. These are different spreads. So understand that. And when setting your SL and TP, exactly, is crazy. I've seen this. So that's why I don't really why do midnight trade when I know the spread gonna be crazy. So I just chill and wait for when the market officially opens. In fact, there was a trade I took on DAX, right? The German DAX. Was yesterday. Yeah, I took it early hours of yesterday by 12 a.m. The spread then was crazy, 84, 80 freaking 4, right? When on a normal day, the spread is 19. And that's actually very okay. Understand? At a point, it reduced to like 60 something. So I was like, no, no, why do I do this? I don't have to do this. Okay. So understand that. So you don't get and when setting your stop loss, right? Factor this in. Let's say your just factor it in. Just factor all of this in your TP, factor everything in. And another thing also, this is basically for beginners, right? So that's why when Coach Michael drops trade ideas, right? You're going to see different prices. One for, yeah, I'm coming. There's room for question, right? There's going to be room for question, just a little bit. There's going to be room for questions. Just keep it, write it down. We're going for questions in the next 2 minutes. It's going to be open. The floor is going to be open for questions, right? So factor in the difference, right? With the broker you're trading with and with trading view, right? Like the one I'm using, I see that there is a 10 points difference. So if my DAX, for instance, is at 595 and the broker is at 605, 23605, on my trading view, I'm seeing 595. So I have to measure this and know, okay, my 595 is something else on this broker. And my 595 on the broker is something else on my trading view. Have this. This can also help you when taking your, what's it called, your pending orders on pocket option, right? So you don't go impute the price of trading view and you cry, oh, my market, it reacted well on my trading view, but it didn't react on my pocket option. Or it cleared on trading view. The reaction was perfect on trading view, but on my pocket option, it's a loss, right? So that is it. Just have this in mind as a beginner so you don't get to question so many things. So when you see the map, you know that, okay, I expected this. So the floor is open for questions. So drop them. We have like roughly 20 minutes to handle the questions. Okay, drop them. Mr. Zoom user or Miss Zoom user, drop your questions. Drop your questions, whatever it is. Beginner. This call is for beginners, right? So just whatever question you think you have, just drop it. Let's handle it. Let's all learn together. Okay. Can be part of what I've talked about here and be part of from our sessions this week, basically, right? Okay. A spread is just the way brokers make their money. Brokers make money whether you win or lose, right? So for every trade you take, for every click of the button, the broker makes a percentage of the risk you're taking, right? For every lot you are going in with, that is an equivalent, that's a money equivalent, that's a dollar equivalent, in risk, right? So for every risk you're taking, the broker makes a certain percentage. That is what spread is. So there are some trading hours where it can be so wild. Like Emmanuel said, 10 p.m., which I've seen as well. Just watch the markets by 10 p.m. 10 p.m. is when the New York session closes. So at that time, there is no session that is active. Both Tokyo, London, New York. New York is the last to close, basically, right? So that window from 10 to 1 before Tokyo session or Asian session basically opens, the spread is crazy, right? So whatever happens in the market, any move you're seeing in the market, it's not official move. It just what's anyhow it is, market will still be moving, but it's not an active trading time for um any market. So the spread is crazy by that time. During the Asian opening, the spread reduces a little bit, but not as low as that of let's say the break of the day, which is a normal London session, which opens by 8 a.m. And if you extend it to the New York session, The New York session, which opens by 2:30 in their time, 9:30. That's their official stocks market section anyway. But then it does open by 1:32, which is 8:30 their time. All right. Market opens by 8:30, but official stocks time is 9:30, which is 4:30 as well. 2:30. Right. So that's what spread is. Okay. So other questions, other questions, other questions. Okay. You don't have them. Do I know what spread is? Okay. All right. All right. Yeah, I got a question. I got a question. There's other block. Yes. Right. Now it does. Sometimes it doesn't. Now, what other block is? Now you ask whether it's bullish or bearish. We have let's use this one as a case study. Right. This is a strong moment. This move here is a strong momentum. Yes or yes. And which candle gave rise to this strong momentum? This is this is like a tug of war, right? The selling pressure was rejected. The selling pressure was rejected. Then what happened? Boom, buyers kicked in. Or let's say when sellers made a particular move, but they couldn't continue. In this particular case you are looking at, buyers stepped in. So the first candle, okay, let's just work with this, right? So other block can be bearish or bullish. So for this particular case, this is a bullish order block, right? But it's a negative candle. It's a bearish candle, but it's a bullish order block. It's a bullish order block because it gives rise to a bullish momentum. In this case, this is a bearish order block, right? Because it gave rise to a strong bearish momentum, right? So in this other case, you can tag this one as the other block here. Can tag it as the other block. But sometimes, just know that the negative candle that gave rise to the strong momentum, the last negative candle that gave rise to the strong momentum, um, is the other block. Other block actually works either way, whether bearish or bullish. All right. But it has to be negative. Perhaps if it's the immediate last candle, I'll let you know. But it has to be the negative because it emphasizes on the fact that the pressure of the sellers was not enough to keep the market going down. Or if it's a reverse case, the pressure of the buyers wasn't enough to keep the market going up, right? Those areas are always key, okay? Those areas are always key. I mentioned, was it yesterday also? I said, close to another block or close to any fair value gap is another block waiting to be respected, right? Close to any fair value gap is another block waiting to be respected. Did you get that? Yeah. So the main thing is it doesn't necessarily give you the next candle can be bullish, but that's not it mustn't. It doesn't necessarily give you that engulfing. So Mr. Zoom, to know an engulfing, to know a spread, after this session, I don't just send me a message after this session. I'll send you a screenshot of my MT5, right? Just show you where the spread is. So you don't get to miss out on it, or you get to look out for it next time, right? You get to look out for it next time. Okay. So keep the questions coming, all right? Keep the questions coming. Yes, thank you. It's called a week. Um, Mr. Zoom, right? Where are you in the courses? Let's start from there. Yeah, have you gone through the beginner course, the amateur, the professional? Where are you actually? Yes, no. I want to know. I want to know. Where are you on the course? Like, have you gone through? You are nowhere. Okay. The first thing you do, right? The first thing you do after this session, because I see so I know, I get that. I felt this way as well. The first time I started learning this, it was like learning a new language, right? Okay. So the first thing you're gonna do now is after the call, reach out to whoever the person is that got you connected to the community. Just ask the person to share you the beginner course. It's a very good way to start from. Okay, it's gonna break, it's gonna give you all those integrities, yeah, the ABC of trading. So you don't just exactly, it's gonna do that for you, right? So just make sure you do that right after this call. It's gonna help you so you flow with us easily. Okay. I felt this when I started now. Come on. It's like learning a new language. Learning when it comes to learning a language, learning like French, German, those ones are a little easier. When you try learning Spanish, no, when you try learning what's it called? Korean, right? Chinese. When you know the letters or the alphabet are not what you are familiar with. When you start drawing lines and all, you know that uh, it's a new game. So family, right? While I wait for the questions, it would be risky to partake in a trade where you don't even know how to place a trade, right? It would be very risky. But then you can always give it a shot, right? You can always give it a shot. Have your account funded. And all you need to do is if they say, sir, if you hear bad, bad. If you hear close, close. That's just it, right? That's just it. So you can take part in it. But if you are not ready to just the risk involved in being an environment where you don't know much about it, you can just wait till you know. We have news like this, they come up every month. So if you miss that of this month, that of next month is waiting for you. All right. So one thing about the market, there is no rush. All you can do is just miss 1 month or miss a particular setup. The same pattern will repeat itself again and again and again, right? Again and again and again. Okay. You're welcome. So family, right? This is also for the beginners. A time will come, a time will come, you ask yourself, you know, did I actually make the right choice to start learning how to trade? The time will come. The time will definitely come. Some of us here might have experienced that. Yeah. If you haven't, wait for it. Yeah. I have some guys, I was speaking with one yesterday. I told him, you are part of those that have the positive experience or the first positive experience or their first experience in trading was actually positive. Their first experience in being part of a community was actually positive. He started day one. By day three, you've made some massive money from one of the NFP. Okay, the NFP news. Day five or day six, you're making another massive money, right? For some persons, they'll think, oh wow, I didn't know Forex was this easy. I've got people say that, man, I didn't know Forex was this easy. Can you imagine? This is what I just made, blah, blah, blah. But reality will still dawn on each of us, yeah. And this is basically when we start doing our personal analysis. If you're sticking to the community to learn and leveraging basically on the trade ideas, you might actually meet this. But of course, with growth comes, let's say, with learning comes opportunities to take you through yourself, right? Some days you want to try, okay, let me do this myself, okay? And when the trade doesn't go well, you question. So one of the things trading will do you is to actually learn. In fact, you can't help but try to understand yourself because you need to understand yourself. You need to sit down, study. I don't know. If you think you know yourself, chill until you are seated, you know. Uh, what are the four trading session we have and their time? Trading session. You mean market opening? That's normal forex session or what we have on BTA? Because I'm not sure if that's what we have on BTA, right? Okay. So, thank you. Right. Okay. Yeah. New York starts by 2:30, right? Or you can extend it to 1:30. In their time, it's simply um it's simply 8:30. All right. London starts at 8:30. Our time and London is the same. So once the time changes, our own time will be 9 9 o'clock. London will be 8 a.m. So for now, West African time and London time are the same. So it's 8 a.m. altogether. Tokyo is 1 a.m. Either 1 a.m. or 12 a.m. 1 a.m. Yeah, between that particular time. So that's when it starts, right? So these are the starts of these sessions. So and if you watch, there's a session I told us there's a particular session we had, and I showed you that at every 2 a.m. at night, there's always a there's always a crazy move in the market. This is 2 a.m. If you look for another 2 a.m. in the market, you're gonna see another crazy move. About 2 a.m. This is 2 a.m. Another crazy move. So this is when New York session do open. There's always just know that anytime a market is opening, right? There's always momentum in the market. There's always volatility in the market. Check it at any time. Okay, let's check. This is 2 a.m. first for Tokyo, right? That's Asian session. This is 8 a.m. Let's check that up. 8 a.m. for you can see 8 a.m. for if you go down to a low time, you're gonna see how crazy this actually is. This 8 a.m. for London. This is two. This is two between 2:30. Of course, this is a 1 hour time frame. So the 2:30 will actually be in here, basically because the 2:30 move is crazy. So between 1 and 2, there's always a high impact move. So always know that. Sometimes I will say some of the best times to actually enter a trade is during these opens, right? It gives you an idea of what to do or where the market is going to go to, right? So that is it about it. Okay. Those are real moves, actually. Those are real moves. They are real moves. But we have moves that are happening and we have moves that happen during official market sessions, right? That's why you don't just neglect. Let me show us something. You don't just neglect. Let me see if I can show you this before. Right. So these boxes I have here are overnight ranges, right? What happens during the overnight, right? If you go to see, there are official chatting systems, right? That give you what the market actually does officially during the official trade hours. So if you go to those chatting systems, in fact, it's not actually free and it's not easily accessed unless you have the information. These are Wall Street guys or that guys that trade for brokers. They know these exact times, right? So we make reference to overnight ranges, depending on any session you want to work with. If you're working with London session, DAX is a European, is of course Germany is Europe, right? So this is for European sessions. So between 12 midnight and 6 a.m., I do mark out the overnight range, right? Overnight range tends to tell me, okay, what am I expecting the market to do, right? Because if you check the official charting system, there's going to be a gap here. There's always a gap, right? And these gaps are like the overnight ranges when the market are not functioning. And what happens whenever there is a gap? There's always the gap being filled afterwards. The gap tends to get filled afterwards, right? So imagine there's a gap here, the market stopped here, and the next time the market opened was around here. There's a gap between this point to this point. What happened? The market always want to move toward that gap before continuing, right? I like to highlight these areas so that I know I don't just base, oh, these are all parts of the move. These are unofficial moves. They are unofficial moves. If you check my US 30, this is I do have, there are areas I want to get where I mark them pretty well. Right. Yeah. I do have my overnight range. Some days are like crazy. I do have my overnight range. They give me an idea, right? I don't have overnight range. They give me an idea. So I know for any particular gap, I know the market will fill it. Right? This overnight range gives me an idea, all right, of how to follow the market when it opens. So you can make it, you can strictly follow, you can strictly say that, you know what, I want to be trading official trading time of any of these sessions, be it, and this will work with the pair you're trading, be it Nasdaq. Okay, I always use stocks indices because I trade them most of the times, right? So be it Nasdaq is US, Dow Jones is US, the FTSE is UK, right? I have a way of trading the FTSE as well. Of course, the S&P 500, I don't really trade that most of the time, but then this also work with other pairs you're looking at. If you're looking at GBP, JPY, CHF JPY has nothing to do with New York session, right? So you know the best time to trade it is during the Asian session because that's where you have lots of volatility. So family, that is it about today. We'll learn more. We need to get better. Anticipate is another day to make mad money, right? So all the best and cheers to an amazing day.